Hey guys and gals, Kevin Bupp here. I've got some very exciting news I'd like to share with you before we jump into today's show. Now, after closing on Fund 4's first acquisition of a $50 million institutional grade mobile home park, we're adding a second irreplaceable piece of real estate to the portfolio, and it's coming into the fund with over $1.5 million of built-in equity for our investors day one. Now, when I say irreplaceable, I really do mean it. I mean, this is an affordable yet high-end waterfront mobile home park located in the Columbus, Ohio market. Quite literally, every single mobile home on this property is right on the lake, each with its very own personal boat dock, meaning a very high demand for affordable weekend getaway options, as well as year-round housing for working Americans. This is a true unicorn of a property, and you will not see another one like this come around again. It really is a one of a kind. A few other aspects worth noting. This park is producing stable and predictable cash flow day one. We're acquiring it with an excellent in-place Freddie Mac loan at a 3.3% interest rate for the next 8.5 years. This also includes a period of interest-only payments. Again, the simple supply and demand dynamics here are enough to get excited about. This is affordable lakefront real estate for both the working American families as well as folks looking to lock down a reasonably priced waterfront escape. Don't let this opportunity pass you by. Visit investwithsunrise.com to register for our webinar and learn about all the wonderful aspects of this property going into Fund 4. Again, that's investwithsunrise.com. Now, let's get on to the show. Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Now, our guest for this week's show is real estate investment expert Quinn McArthur. Quinn is the founder of Apex Capital and co-founder of Legacy Land Fund. Now, Apex Capital is a real estate private equity firm that invests in various asset types across the country, while the Legacy Fund focuses on strategic land note acquisitions. Now, Quinn is a graduate from West Point and a former US Army Green Beret who uses the principles that he acquired serving in the Special Forces to pave his way into becoming a successful real estate investor and entrepreneur. And so with that, guys, I'd like to welcome Quinn to the show. Quinn, how you doing, my friend?
Very good, Kevin. Appreciate you, man.
Yeah, excited to have you here. Excited to again pull back the curtain and learn a little bit more about your business. And I know, we're specifically we're going to place a little bit more of an emphasis on the Legacy Land Fund. I know that's one of the more recent endeavors, and sounds incredibly exciting. Just a little bit we were chatting about the business model and what it is you guys do. So looking forward to taking a deep dive there. But before we do, maybe we'll back up a little bit. I'll pass it back to you. I gave you such a brief introduction, Quinn. Maybe for those that aren't familiar with you, that don't know who you are, take a few minutes and tell us a little bit more about yourself.
Sure, not a problem. Yeah, like you mentioned, I was in the United States Army. I was an active duty officer for about 10 years. Split my time between the infantry on the first half of my career, and then the latter half was in the special operations in the 7th Special Forces Group. Feel blessed to have worked with some tremendous soldiers and great deployments, great mission sets along the way. We had a growing family at the time, so right about that 10-year mark is kind of a natural breaking point. And so my wife and I decided to move on from the Army and, pursue entrepreneurial endeavors. Jumped into real estate, had some friends and family in real estate, and I just kind of saw the impact that they were having, in their lives and also in the communities that they were investing in. It just seemed like a real natural fit for me, for us, for our family. And really never looked back. Kind of just put pedal to the metal and just went all in on real estate. Just been doing a bunch of different things, have tremendous exposure across a bunch of asset classes and strategies. And now I'm fortunate to be able to kind of pursue my own strategies and opportunities doing it full time.
Okay, no, fantastic. I appreciate that. And just curious as to what what that jump looked like, coming back into civilian life. I mean, after serving, in the Special Forces and just being a career military man for basically the first half of your adult life, or the first portion of your adult life, and jumping into civilian life. But not just that, but really, getting your role in the entrepreneurship right out of the gate. So, I mean, it's kind of, right back into the boiling pot, right?
Yeah, no, it wasn't easy. I mean, I have some very supportive family, very supportive wife that's just, she's just, my cheerleader along the way and everything I do and pursue. But yeah, it was challenging because I mean, quite honestly, my identity was really tied up in what I
Mhm.
was doing, you know, in the Army, and a lot of time and effort and investment went into that career, and so to separate was a big deal that we didn't, a decision that we didn't take lightly. But
Mhm.
looking back on it, it was definitely the right move. It's definitely the right decision, and feel like all the kind of the experiences along the way help me now and help kind of pave the way to for success in the kind of the business world. But yeah, that initial kind of decision to go was really for family. You're focusing on the family, and but luckily to have kind of a good support network around me to help make it as smooth as it could have been.
Mhm. No, all great, and so into land investing, right? I know that you've got your hand in a number of different pots as far as real estate investments and strategies and just really focus areas. But today we're going to speak, more in depth about land investing than any of the other strategies that you're involved in, and that kind of leads us up to the Legacy Land Fund, and just I guess maybe help us better understand your involvement in land investing. I mean, I guess maybe from a introductory standpoint of just what attracted you to that space, and then um, following up to that, exactly what is the Legacy Land Fund? What's a business model? What is it that you guys do?
Well, what initially attracted me to it, kind of coincidentally, there was a retired lieutenant colonel officer in the Panhandle of Florida, which is where I was living, kind of during the time of my separation from the military, and he was doing land. And so I knew him, kind of knew just through friends of friends what he was doing, and he would talk about it a lot, and I'm kind of skeptical by nature, but after a while, he kind of saw the impact that it was having on him, and he was doing very well at it. And it was kind of cool because he was doing land in the Panhandle that we could go out and see, and the underwriting is fairly simple when it comes to land. Not to mention there's no tenants on it. There's no maintenance involved. And so to me, just at the time with just my busy schedule, it was just um, kind of an easy exposure into real estate, kind of an easy like dip my toe into it. And so I did some deals with him. I trusted him. There was like kind of instant credibility just with his background and our shared experiences and deployments and so on.
Hmm.
So lucky to kind of have him in my corner, just you know, looking over my shoulder and some of the deals that I was doing. Again, we did deals together, and that's really where it kicked off. I saw at early on with relatively small amounts of money investing, how it was kind of moving the needle. So that was my
So
initial attraction to it. It was easy, and it was in my backyard, and I knew someone doing it, so that's my story.
yeah, no, that's great, and I guess just paint the picture. I know there's some variations to the land investing model, but just to make sure that we're speaking the same language, maybe paint the
Yeah,
picture a little deeper as to exactly what
sure.
that the investment side looks like.
Yeah.
When we say land investing, like what what size tracts are these rural pieces of land? How you making money off of them, and so forth.
Well, I mean, obviously, there's so many different business models within
Hmm.
land. It's almost, there's like niches within the niche, right?
Sure.
But what I was doing and what I grew to appreciate was notes. And so what we were doing with this kernel that I mentioned is we were buying land and then we were selling it via seller financing. And I know some people do it with like smaller tracts, smaller, desert type properties in Arizona and New Mexico and Texas, wherever. But we were doing it with sizable properties, 5 to 20 acre properties, 50 to $150,000 purchase price, and then selling them, but selling them with seller financing and then just holding the note. And so I kind of saw the power of building a note portfolio early on.
Hmm.
Um, and so, I mean, again, yeah, tons of different strategies. That's the one that I kind of honed in on personally.
And I'm assuming buying them at a discount to what the retail value is, correct?
Well, we were actually originating the notes because we would take title to the property, we would actually buy it, and then we would actually sell it and originate the note with our own,
Oh,
with our own
okay.
contracts.
Understood. Okay, got it. No, that makes sense. Okay. Well, so Legacy Land Fund, you guys obviously you guys finance land now. You obviously saw a need in the marketplace. You saw a void in the marketplace in this business, and so maybe speak to Legacy Land Fund. What is it that you guys
Sure.
do? The services that you offer and how you benefit land investors.
Yeah, so I mean, really, it's just again, it's really just doing more of what I've been doing for years. It's really not like a super sexy strategy. I mean, it's really just originating notes, like I just mentioned, or buying notes on the secondary market at a discount, and then just and then building a portfolio. And you're right, there's a big gap in the market for this because banks generally don't like to lend on land for a variety of reasons. And so that leaves a good opportunity for private investors, private lenders to do just that. Um,
So are you raising the capital source that you use for your funding? Are you raising it from, high net worth accredited investors and then ultimately, lending it out of the fund on behalf of, different land investors that are in need of financing to fund their deals
yeah.
or okay.
Well, I mean, originally it was
Yeah.
personal funds. I mean, it was
Yep.
just what we could scrape together to kind of find these deals. I had to pass on a lot of deals just for lack of capital, right? And then, started reaching out to friends and family, did that for a while. But to really scale, we couldn't do that and maintain, the proper compliance. And so we never really set out to create a fund, but it was almost for lack of better options. And so the fund kind of came to be like, hey, how do we invite friends, more family, more friends, more, acquaintances, people that we run into to like get exposure to this tremendous asset class that they otherwise wouldn't have an opportunity to. How do we do that? And the best way out there after, talking to mentors and attorneys and securities attorneys, the fund was the best way. So that's what this Legacy Land Fund is. It's a 506c,
Got it.
accredited investors only. So and it's an evergreen fund, and we just launched it earlier this year. But again, it's nothing new. It's the same strategy we've been doing. Eric Strog is my partner in this, fellow co-fund manager, and we just doing more of the same what we've been doing for years, and but pooling our kind of our efforts and our resources and creating a fund around it.
Is most of the just trying to understand who your ideal client is it typically, I'm, Mr. Kevin, I'm the guy that's out there searching for, raw land at a discount that I can ultimately buy, then in turn sell to the end buyer, either by carrying back financing on it or maybe bringing the legacy land fund in to actually help that end buyer purchase it, or is your ideal client, Mr. Kevin, the investor, basically, I want to buy this tract of land at a discount. I don't have all the cash to do it. They're not willing to carry financing for me. I need to get a hold of Quinn. I know Quinn will finance this deal for me, at least, a certain portion of it. And then, I need short-term bridge financing from Quinn. And then ultimately my long-term strategy is still to turn around and sell this to an end buyer, with a profit margin factored in there on, seller finance terms or what have you. I guess
Mm-hmm.
who like what exactly who is your target audience that you're looking to provide financing for or funding for?
Yeah, well, on that side of it, on the operation side of it, our ideal client is the land investor who has no interest in holding a note portfolio. And so yes, they're buying land and they want to flip it, they want to sell it, they want to get into the hands of someone who can, you know, um, use it at their highest
Okay,
and best use. But at that kind of that juncture is when we step in as the lender and hold the note. And so we
gotcha.
have, yep. And so um, a lot of people, and we encourage people to do just that. Hey, create an acquisition machine. Let's go out there, let's find the land that's being underutilized. But when you sell it, we encourage them to, hey, there's this, we can hold the note for them. And so we come in with our pool of funds to finance that and to manage the note. And
What
they
did
get
the
cashed out and they move on to the next deal.
and what do the typical terms look like? I mean, because I know that their end buyer typically they're going to be selling, and a lot. I know a lot of these land, a lot of the land investments. I buy it for call it 30 cents in a dollar. Let's just use some, rough numbers here. Let's say that, it's $100,000, retail value of the piece of land is $100,000. I pick it up for $30,000. And then like typically if I wasn't using your services, I would look to turn around, sell this to the end buyer, carry back a note on it, and be able to get retail, because basically the end buyers really, they're buying on payments, not necessarily what the overall purchase price is, right? And so long as you can get within their payment range, it's kind of the buy here, pay here mentality. They're paying. I'm getting full retail for it, but in the form of monthly payments after a certain amount down. What does so there so that note, I mean, that note, what I've seen, maybe they're getting 5% or 10% down, maybe sometimes more than that, but like there's not a ton of skin in the game. It's more of a stacking up notes with monthly payment, reoccurring monthly payments for that investor that ultimately sold that note to the end buyer. And so I guess just a better understanding, um, you know, how much can an investor, like, is it more beneficial for them to, to have you come in and help fund that end buyer, um, and get them cashed out, but they probably, cash today is worth more than cash tomorrow, right? And so there's do you get what I'm saying? Like, I'm just trying to understand,
Yeah,
what do the terms look like that you might provide?
sure.
Is it 70% of market value? Is it greater than that? Is it less than that?
Yeah. So our
I don't think I'm being very clear. I'm having a hard
no,
time
I
actually
I, I understand
articulating
what you're.
exactly what my question is, but
Well, the challenge is there's so many different niches within land,
yeah.
and so kind of I think the kind of what you were describing is buying it pennies on the dollar and kind of flipping it and generating a note, but really only getting 5%, down, or 5 to 10% down payment. That's kind of, we don't really do that. That's kind of
Okay.
smaller, lower priced properties. But yet again, we don't do the $1 million properties. We kind of find a sweet spot in between where, it might be, like I said, it's kind of in between 30 and $300,000. And we won't take 5% down. It's got to be, our loans are always, uh, it's 20% down. There's going to be a
Okay.
credit check.
Okay.
Sometimes there's a personal guarantee tied to it.
Mm-hmm.
You know what I mean? So these notes that we're either originating or buying have to have those components. And so
Yeah.
it's a very it's a security that is stable and secure, and it's a safe investment. So it's
Understood. Yeah. No, fair enough. I appreciate the clarity there. No, that makes sense. And so, just, rates today, we are they double digits for your typical loan, assuming, again, assuming the credit profile of that borrower is, in line, with at or above the minimums of what you're seeking, whatever it's a 640, 660, 680 credit score. Um, I'm assuming they make enough income. But where are the rates at today, generally speaking?
10%
Okay.
fully amortized loans is very common.
Okay.
You
Yeah.
know,
15-year
9 to
amortization,
12.
20-year amortization.
No, it's much shorter. I mean, we actually don't want to go for more than like 10 years.
Okay.
And so it's folks who, they just don't have the capital right away. They
Yeah.
want land. They want to build a cabin. They want hunting land. They want to go out and shoot guns, whatever.
Hmm.
They don't have the big chunk of change up front. That's okay. Give us 20%, pay it off. And a lot of times they pay it off early, and so there's really, I mean, there's no very, minimal fees, early pay, like no pay, early payment
Commitment.
penalties.
Yeah.
So we try to keep it real simple, and it's all just kind of private. And again, we're just stepping in as the bank, and so it's really a win for the land investor. It's a win for us because we hold the note. It's a win for that landowner, And then of course the quadruple win, if there would be one, would be like our outside investors who are accredited investors to come into the fund, and basically we're passing on that 10% interest to
Yep.
our investors.
So I guess the competitive advantage of the funding that you provide to that of maybe a traditional bank, community bank. I mean, most banks are probably going to be capped at like 50%, maybe 60% loan to value if they're lending on just purely raw land. I mean, unless you're an established client that carries high balances with that bank and you've been banking with them for 20 years, right? But generally speaking, like and they might not have an interest in lending on land at all. But if they do, they're typically capped, 50% range loan to value. So you guys basically offer a competitive competitive loan at a I guess less down, right, like at a higher loan to value than that of what a traditional bank
Yeah.
might lend
And
at.
sometimes it's not all based on the metrics. I mean, sometimes it's like, look, like there's a lot of folks out there like they'll never talk to a broker or an agent. They're like, I
Hmm.
want to do this all private, right? So no agents, no banks. It's like there's that's very common.
Hmm.
I think especially in land. And so it's like the personal touch, and the service, the customer service that we provide, and is that's really the competitive advantage. We're not doing anything, you know, um, I don't know, nothing that's proprietary.
Yeah.
It's all pretty simple. Um,
And so, is the intent to basically hold a portfolio of these loans, or will some of them get packaged up and sold in the secondary market? Just to get better understanding the business model itself.
I mean, right now we don't intend to sell the notes. I mean, the yield that we're generating because we're buying it at such steep discounts or originating at steep discounts is tremendous. So I mean, I don't see that happening, but I mean, who knows? Uh,
Yeah.
the goal right now, I mean, our biggest really biggest goal and intent is just to it's for that fourth entity that I mentioned, the outside, the accredited investor who wants exposure to real estate, but they don't want to own it. They don't want to jump into land investing themselves. They don't want to build the systems out and all this stuff. They want exposure to it, but they don't know where to start. They don't know who to trust. And so, a fund kind of seems scary at first. It seems like institutional. But when you meet Eric and I, co-fund managers, like, look, it's just us. Like we're not, again, it's just us managing it. We just happen to have pretty solid connections in the land community and tremendous deal flow. And, and I think that, if people just want to buy income, I mean, we offer no like growth opportunities. What we're offering is a set 10% preferred return. I mean, there's
Yeah.
there's no upside. But if you want a monthly distribution starting month one, like I don't know of a better
Hmm.
investment vehicle to find that. I mean, we know exactly what our payments are going to be. We have the loans. I mean, they're all right there. I know what the principal and interest are going to be per month per loan, and I know so it's again it's boring. It's nothing nothing like groundbreaking, but it works and it's stable.
Yeah. I've always been curious about the land model. I guess it's more pertains more to rural land, rural tracts of land, and and more tertiary markets of coming up with true valuations. I'm just curious how you
Yeah.
guys really place a real market value. I mean, there's some of it's opinion based, some of it's data based, on recent sales. But again, typically if you're out in these rural markets, there's not a lot of transactions happen. There's transactions that occur, but there's not typically a whole batch of like recent comps over the past 12 or 18 months, right? And so just curious how you guys, especially doing it on a wide scale across the US, with the exception of I think of a few states that you guys don't operate in, just how to get a handle on that and do it relatively quickly.
Yeah, I mean, you're right. That is one of the hardest challenges because of the subjectivity of market value of land when there's a limited amount of comps.
Hmm.
We rely very heavily on land specialized agents. I
Okay.
mean, so like, hey, agent, like you've got to go walk this property. A lot of times if it's a big rural property, we tap into like our database of land specific agents with like whitetail properties. I mean, they love land, they know land, like they're agents that's all they do is recreational property. Well, hey, you go out there and based on all these attributes, what do you think it's worth? I know it's tough to value, but yeah, it's usually just a combination of comps if there are them, and it's the opinions of those agents, and so we can within about 10 to 15% um, margin, we're pretty accurate on determining actual market values. But I mean, not all the land we do is that.
Hmm.
More and more, actually, we're doing infill type properties. So I mean, a 70-acre recreational tract in Oklahoma, that's tough, especially out in the middle of nowhere. But if you've
Yeah.
got a 1 acre property in like a very nice subdivision in North Carolina, hey, I know exactly what that's worth. Like
Yeah, right.
within a few, like, and we're gravitating more towards those higher quality properties where you can achieve, determined valuation. So it's not always just this nebulous, just
Sure.
what's the market value. But
Yeah, no,
so
I've always, yeah, no, valid point. Just, yeah, I've taught years past. There was a guy I had on, and he bought a lot of rural desert land out in like Nevada and Arizona, and I'm like, oh my god, like, there's endless amounts of land out in those areas, right? And I'm sure there's transactions that occur, but just I remember sharing some examples of like some of the comps over the past 18 months. They were like from $200 an acre to $2,000 an acre. I mean, it was like
yeah,
this broad spectrum of. I'm like, how that those aren't comps. I mean, that's such a wide range. Like,
I
where do you
know.
hone in?
We don't get anywhere. We don't touch that. I mean,
Yeah,
we actually don't even do Arizona. Um,
interesting.
that's one of the
Okay.
reasons why. But yeah, no, it's tough. That's why, I mean, we love to do deals on land that honestly we would enjoy personally. I have a family, I have, three young kids. Like we want to have some land and, like I want to do deals with land that like, hey, I would, I personally would really enjoy this, and so we get into it, and they're quality pieces of dirt that have, tremendous potential.
What questions haven't I asked yet, Quinn, that are relative to this conversation that you think folks would like to know more about?
What questions haven't you asked? About the fund itself?
Just yeah, the fund, the business model. Again, just trying to gain a better understanding of everything that you do inside the Legacy Land Fund.
Yeah, I mean, I'm trying to think of some questions that maybe I get most often. I think our website handles a lot of the frequently asked questions, but a lot of it is a lot of the questions go back to, well, it's land. There's a reason why the banks aren't in this space, right? And
Mhm.
so, like, why do you think you're so smart and come in and serve as, serve within that in that capacity? And it's not that we think we're so smart; it's that we know how to, if and when there is a default, we know how to get this thing back on the market and resell it. Maybe we sell it cash, or maybe we originate another note and collect another down payment. To us, it's really not a risk because we know it. We know the space. We know how to do it. We have the contacts. We have a large list of agents, title companies, land specific consultants that can help us. And so, the bank, they don't want to take back that asset. They're like, what the heck am I going to do? The land doesn't cash flow. But for us, we're like, that's an opportunity because we know we can, if we have to, we can foreclose. We'll resell that asset and get it back, turn it back into a performing note.
Got it.
That's the main question I get asked.
Okay.
Something you did, yeah.
Yeah, no, that's great. That's great. So for those that want to learn more, you want to go ahead and I'll give you, opportunity to plug the website or any other resources that you might have available.
Yeah, sure. The website is www.legacylandfund.com. You can reach me personally at info@legacylandfund.com. I think the website does a decent job of kind of going through it. Might get you to like an 80 or 90%, and then you can have a call with me, schedule a call with me personally, and then I can get you that, full comfort level on what the business model is and if it's a good opportunity for you.
And you guys, the fund's open now. So if investors actually have some capital on the sidelines, they'd like to invest in the fund, there's an opportunity to do so.
Yeah, it's open,
Okay.
off to a great start. We just started it this year, and so we've got a backlog of lo loans that we're transferring into the fund,
Hmm.
and pretty excited about the opportunity. I think it's a good opportunity for folks who again just want to buy some income. They don't want to spend more time, renting an Airbnb or going that route. They just want to deploy capital and get a nice passive return.
No, fantastic. Well, Quinn, I appreciate you coming to the show, my friend, and just providing valuable insights about the business and just excited for, for the future for you guys. Sounds like you got a great opportunity ahead of you.
Yeah, appreciate it, man. Thanks for your time.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.